Hey guys, Justin from Simplified Investing. In this video, I wanted to talk about trading, how it is resorted to as a casino, and how you can essentially think of it as a casino and use it to your best advantage. Before I get started, if you could like and subscribe to our channel, it would be greatly appreciated. If you could check out our team at simplified-investing.site, we would love to have those of you that are non-members and help take your trading to the next level. So basically, getting started, you guys know what a casino is and how is trading related to the casino. The biggest way that is related to casino is the outcome is really unknown. When you enter a trade, there's not a single trader out there that knows the exact movement of where the market's going or where the stock's going. The stock market is simply going to be a probability game. You want to put the probability in your best favor, just like you would be in the casino. You want to, if you're the casino and you're running the casino, you want to have the probability in your favor that you will make money while also having the people at the casino make money too to bring them back. And that's really what you're going to be doing and how you should treat trading. You'll never ever predict, or I'll say you'll never know for sure the movement of a stock or the market. You can have clues and indications and a formulated opinion backed by your own strategy. That gives you good ideas of where the market will go, but the market is going to be a random movement in that not every movement is going to be the same, and past performance does not indicate future performance, which is where it gets a little interesting. So basically, starting off, how to play this like a casino. For those of you starting out, you think that you have to win 90, 100% of the time to be profitable, and that's not true. There's actually traders out there that are winning 50% of the time, but are also very, very profitable, and you may be wondering, how do they do that? And that's really because they're letting their winners run and they know when to cut losses. So a perfect easy example for you guys is going to be playing support and resistance. I brought up Boeing, easy scenario here, just by playing support and resistance here. What you can do is you can buy on the break of this resistance and sell at this resistance here. Okay, that's an easy formulation to have this probabilities on your side, and you get a better entry here on this pullback here. Boom, pullback, entry here. That's a prime example. You want to have the probabilities on your side and have a plan before you execute. By having a plan before you execute, you'll at least have an idea to know when to buy and when to sell. Basically, what happens if you have no plan at all, you'll buy a stock and then you'll sell it, or you'll buy an option in this case, and then you'll sell it way too early when it continues running here. But when a stock and the option works against you, and say Boeing keeps pushing down here, it takes you forever to cut because you have hopes that it will come back. It's all going to be a psychology game, just like at the casino. That's really what it's going to be. You have to have a formulated plan for an entry and exit, and let your runners run and know when to cut your losses and formulate a tight stop loss. That is going to be how you can still grow your account while only being right 50% of the time. It also compares to being a meteorologist. They're wrong, it seems like 70% of the time, yet they still have a job. You can be a trader and be right 50% of the time and still have a job. That's really what's going to set your trading apart. Now I get a question, is trading gambling? I don't necessarily think of it as gambling. If you have a formulated plan and strategy and you execute that, I don't foresee it as gambling. Is it gambling if you're just going to YOLO your entire account into an earnings play? Definitely. That's essentially gambling and just throwing your money away without having any formulated entry or backed plan before your entry at all. Does it require some luck? That's what I get asked a lot. Does trading require luck? It does, but not to the extent that people think it does. So what I'm saying is basically, is there a factor here where you could enter Boeing and there's news about the 737 MAX that works against you? That just happens to be bad luck working against you. You got in at the wrong time, news article came out and you sold off. That is where the luck portion comes into it. However, it's not affected as much as people think when you are getting into trading here. The next thing, and the thing that's really going to compare trading to a casino, is you need to maximize your risk to reward ratio. And you may be wondering, Justin, what do you mean by maximizing your risk to reward ratio? You want to have a risk to reward ratio that is 2 to 1. Now this is tough to tell people and tough to have people execute, but it's something that I recommend. What do I mean by a 2-to-1 ratio? This can be, say, if this applies to a lot of those of you that are swing trading and holding longer plays here, besides making intraday scalps, you have to have a risk to reward ratio of 2-to-1. So what does that mean? Your max or your gain is 2 times that of what you can lose. This is for those of you that are looking for longer intraday plays and looking for longer time frames. Before you enter, you want to see your risk to reward ratio. So you want to see, say, a reward of 20% with a max loss of 10%. That will be a 2-to-1 ratio, and as you extend those ratios out, your chances of winning are going to be better and better. Your chances of growing will be better and better, but your winning chances go down. But when it does hit that reward ratio, it will greatly outweigh those when you do hit that loss ratio. So that is something that really, really, really have to pay attention to. Maximizing your risk to reward ratio before you even enter into the position is going to be very, very key. And that's something, again, that comes back to support and resistances. You guys can play these support and resistances. An easy way to go through this, something I thought I'd share with you, is just using these support and resistances to maximize your risk to reward ratio. Say you hold this bottom nicely here on Boeing here intraday, maximizing your risk to reward ratio, enter here, stop, tight stop below this price point right here at 169.96. And you can see this reward all the way up here at 173.57, which we ended up hitting. That risk to reward ratio here right there is almost 4-to-1. So greatly increasing your odds of growing your account. However, you may take hits, but your winners on your reward will be a lot bigger, and your chances of growing your account will be a lot better just by playing the risk to reward ratio. The next thing is really you want to be the casino. Before you get into a position, you have to monitor the risk to reward ratio. You can't just enter on hindsight, or you're just entering for fun to find a play. You want to be the casino, not the casino player. The casino always has the odds in their favor, and that's what you should do. Formulating a strategy and a plan that has the odds in your favor for an entry so you can grow your account and you do have the odds. It's, again, something that I just mentioned before. Again, past movement does not indicate future movement, but you can formulate these entries and exits to make the probability the best in your favor to help you grow your account. And that's really what it's all about, putting the probability in your favor here to grow your account. Now, the next thing I get is how many trades should I make a day? And if you know, the more you play the casino, the more likely you are to lose. So reduce your positions and make them small. You don't have to go making 20 to 30 plays a day. I typically make 2 to 3, sometimes 4 plays a day, and if those are consistent quality plays, there's no sense in chasing any other plays. At that point, if you're making that many plays, more times than not, you're just going to be chasing plays and not actually formulating your strategy and executing. So by reducing your positions and reducing your plays, you can help increase your chances of winning in the stock market and growing your account. Again, I use 2 to 3 trades a day. Some people may have 5 trades a day. I wait on those high quality setups and enter there. Instead of trying to play 8 to 10 plays a day, I typically stick to 2 or 3. And then the next thing and the last thing that I wanted to cover in this with the casino portion is make sure you play small. Don't just enter your entire account into a position, because what happens on the risk to reward ratio, if you risk your entire account on that position and it loses, boom, you'll have to make a lot more to get that back, versus if you stick to, say, less than 5 to 10% of your account in one position, then if you have one loss, you can easily mitigate that by other plays with the probability in your favor, and then you will still continue to grow. Again, I've mentioned this in several videos. Do not enter your entire position into one account or one size, one play, because if it goes south against you, even though the probability is in your favor, on that odd chance that it does go south against you and you use your entire account, that will hurt your account and hinder your performance, and it will make it more difficult for you to get that back as you used your entire account balance into one position. I personally recommend 2 to 3%. That gets tough with a smaller account. Then you can obviously be more lenient with that, understanding the risk that you are taking on with a smaller account. I personally use typically 1 to 2% in a single position of my account size, of my options account size, to execute these positions. So that way, if one position goes bad against you, you have one good position. That good position mitigates that bad one, whereas if you use your entire portfolio and it takes a big dive in one position, then it's a lot more difficult to make that back, because a 10% or a 50% loss requires a 100% gain to make that back. That's where it gets tricky. So like I just mentioned, if you're in your entire account's $1,000 and you suffer a 50% loss from this position, now you're at $500. If you make 50% on $500, you're only at $750. So you have to make 100% versus a loss of 50. So your risk is 2 times that of your reward now on your account, and that's where it gets very difficult to grow. So I hope you guys found this video very helpful in how the stock market can be related to the casino. If you found this video helpful, if you could give it a thumbs up and subscribe, it would be greatly appreciated. And if you are looking to get our course alerts and live streams, if you could check out simplified-investing.com, we would love to have you guys on board and help take your trading to the next level. Hope you guys had a great day today, and look forward to trading with those of you on the team tomorrow. Thank you.